Hello, everyone. I'm Michael Marchuk. Welcome to the Transform Now podcast. In this episode, we'll be chatting with Chris Raimondo. Chris is a partner in the EY insurance sector and currently serves as the EY Americas Consulting Insurance Leader. He's got more than 20 years of experience in the insurance industry with focus on transforming core business operations through the implementation of technology. Chris has a track record of delivering complex transformation programs at major domestic and international property and casualty and life and annuity insurance carriers. Today, we'll be chatting with him about an article he wrote about how the insurance industry is entering an age of autonomy where AI, driverless vehicles, and humanoid robots will be transforming products and operations. Welcome, Chris.
Thank you, Michael. It's a pleasure to be here. Really looking forward to our discussion today.
Me too. So when I was going through this, I read the article. The one thing that stuck out to me, I think everyone understands the whole driverless car kind of thing, but bringing in humanoid robots into insurance, connecting those two doesn't seem like really intuitive. So I'm hoping you can give us some insight on where that came from.
Yeah, absolutely. Maybe I'll start with just a small personal story that I think was the catalyst for why I wanted to write the article. And then, I can definitely touch on the humanoid robotic component of it. So, it's late 2024. I was out in the Bay Area on a business trip, and within a 48-hour time period, I had the opportunity to ride both in a robo-taxi as well as experiencing Tesla's latest full self-driving technology in their Cybertruck. And these weren't, short 200-yard sprints. They were, relatively complex distances, complex traffic, et cetera. And I was blown away. And, I came from a place of maybe being a bit of a skeptic about really how fast this technology might reach mainstream. And this changed my perspective. So that really was one of the catalysts that got me interested in the topic and why I wanted to dig a little bit deeper and do some more research. So coming to the humanoid robotic piece is, really, I think a lot of the conversation around what AI is going to transform in the insurance industry has to do with, the software or digital AI and how it's going to transform operations and customer service and technology development and so forth. I wanted to start the conversation around physical AI's impact on the insurance industry, because I think that has the opportunity to be even more transformative when you think about the changing nature of risk. Today, risk is traditionally centered around the operator, the driver, and in the future, there's a chance that it could be reshaped around the manufacturer or the technology provider that's powering the AI vehicle or the humanoid robot. So I was looking at the workers' compensation industry and starting to think about, what would this do to how that product is really going to be sort of priced, underwritten, and how would that change, or how would the shape of that product potentially change if there was mass adoption of humanoid robots in factories and construction sites and hospitals. You kind of could just, do that sort of projection. So, that's what really got me interested in the autonomous vehicle, humanoid robot, physical AI component of the AI story, is I felt like so much of the conversation was around operations, middle and back office. What if we project this out to the physical world and what that would do to how the insurance industry has traditionally created products and underwritten risk?
Gotcha. So, with all those misconceptions coming plus, there's got to be some more kind of incorrect assumptions that the insurance industry currently has as they're looking forward in it. Maybe you can kind of delve into a little bit of that.
Yeah, I think, the common misconception I think would start with is, number one, that this technology is still in a lab somewhere and there's a lot of experimentation. And as I said earlier, I was convinced it wasn't. And I think that is, the light bulb going off is that, this technology is incrementally rolling out, right? If you look at some of the recent announcements around autonomous vehicles, companies rolling out in Austin, Atlanta, Miami, Washington, D.C. on the roadmap. So I think there's going to continue to be increasing adoption of the technology and rollout. And then on the robotics piece, the humanoid robotics piece, most recently, I think it was Bank of America said that humanoid robotics could reach, mass commercialization by 2028. And that's not far off. So again, I think the misconception is really around the fact that this technology is still in experimentation stage. And I think it's, now being rolled out. The other misconception, which we talked a little bit about, is the fact that, that this is really going to be internal to the insurance carrier predominantly. Like AI is going to transform within the walls of the enterprise. And I think the transformation is going to happen both within the walls, but also permeate in broader customer applications, as well as the products and services that insurers deliver.
So we started talking about that, and this kind of leads into my next kind of question related to this. So if you're talking, let's make the assumption that 2028 has more commercial adoption, maybe not full commercial adoption, where you can go buy your old humanoid robot at Walmart, or pick up a whole fleet of them, just have them dropped off at the factory tomorrow. Let's assume that we are starting to see some more adoption of this. That to me looks like there's an opportunity for from an insurer's perspective, for offering new products and services to support that, but also kind of looks at how does that going to affect the way they see the risk, human versus maybe autonomous. Are they prepared for a 2028 rollout of humanoid robots?
Well, that's the conversation that we're getting started with. So a lot of what we're doing with some of our clients, in fact, around these topics, are scenario planning around adoption curves. So think about, what impact will these technologies have on current products, current customers, distribution strategies and distribution networks. And, as the insurer, where do you want to play offense? Where might you need to play defense? And maybe where don't you play at all? And I think what we've seen, at least on the autonomous vehicle side, which I think is very transferable to the humanoid robotic side, is that this concept of a hybrid policy almost, where you're creating an insurance product that provides standard coverage. So, if you think of an auto policy, comprehensive coverage, collision coverage, but then it extends into product liability, cybersecurity, software malfunction, et cetera. And I think you could see a similar paradigm of a hybrid product in workers' compensation, for example, where you're probably still going to have the typical injury component that has to be underwritten, but then also malfunctions, software defects that may lead to business interruption and so forth. So I think that's the arc of the conversation right now with clients is, let's talk about the scenarios. Let's talk about the adoption curves. Let's talk about impact to your products. Let's talk about what this means for your customers. And do we need to redefine what the word customer means for you in the future? And then how would you potentially distribute and partner to get your product into market? Might look very different because you're no longer maybe selling to an individual. You're now selling to a company with a fleet of vehicles or a fleet of robots. So to bring it all back together, that's really where we're at. There isn't this, massive undertaking of completely changing the insurance product construct. Like, I think it's going to be an evolution where we move from today's products to hybrid products to then maybe potentially products that are just completely designed around autonomy in the future.
Gotcha. So one of the pieces of the article mentioned too is you related to the importance of market-facing innovations alongside these productivity gains. What are some examples that you'd see from the innovations and their potential impact on the insurance industry?
Yeah. So, market facing innovation, I think we've talked a lot about the product side. So
Hmm.
I want to bring it to another topic where, um, the insurance industry and has always been sort of in this mode of loss prevention and prediction, right? And right now, I think the insurance industry still is very heavily indexed towards loss prediction. And how do you move along the arc to loss prevention as core to the insurance industry? So, how do you provide better customer service? How do you help mitigate loss in a more effective way or even prevent loss? And I think that's really the role where we're seeing agentic AI come into play from a market facing innovation standpoint. We've actually been working on some proof of concepts that you have agents with early detection capabilities in commercial real estate, for example. So I think that's the unique market-facing innovation of this technology, beyond what we've talked about related to products and how those products might change and, how customer experiences might change. I think there's an opportunity here to really harness this technology to move insurers along that arc of loss prediction to true loss prevention.
Gotcha. It reminds me of a scene from iRobot where Will Smith's character is driving in this tunnel and he switches his car from automatic to manual mode. And that they were saying how reckless that was. Do you foresee that moving to that transition where perhaps uh, insurance companies will have some kind of impact on how the tools that we're used to using right now are used, especially as you move to that loss prevention perspective? Hey, we're going to trust the technology because it's been proven. And if you move away from using the technology, that perhaps your risk profile changes.
Yeah, I mean, I think there's definitely potential for that. There's a statistic out in the market right now that really caught my attention, that was jointly put out by about, like the propensity of accidents for autonomous vehicles compared to manually operated vehicles. And it's a huge delta in terms of that propensity. I think, there's another statistic that Elon Musk may put out there in terms of like the number of miles driven is exponentially greater before an accident happens in a autonomous vehicle as opposed to a manually operated vehicle. So, I think just drawing on those two things, you can see why, the insurance industry is incented to want to explore how they can work with the technology companies in partnership to explore that more. I think, it's interesting because right now a lot of the pricing is going to be based on a combination of frequency and severity. In the future, you may be heavily indexed to severity because frequency has come down significantly. So you could imagine a situation where the losses have much greater severity. There's just much fewer of them because of the autonomous technology.
Gotcha. Gotcha. That makes sense. So, building on that, so we've got the idea that you've got technology that's being rolled out that could be preventing insurance risk. How do you adapt to the evolving regulatory landscape that would obviously surround some of that stuff? And what kind of measures can insurers take as they start looking at some of that ambiguity while they're pushing forward to make these changes?
Yeah. So, I think it's going to be a fast changing regulatory landscape from insurers. I was surprised. I think I just, read recently that over a dozen states already have been working on regulation around autonomous vehicle insurance and liability requirements and so forth. So there's certainly some activity around it being early days. I think you have to look at it from the perspective of AI is going to become central to the insurance carriers' operations, right? And to their ecosystem that they work in. So how do you address the concerns while also staying nimble and agile to changes and turn it into a competitive advantage? And we like to say that the foundation is always going to start with strong internal governance around AI and data use. So, clear policies on how data is collected, how it's stored, how it's used, ensuring that AI systems are fair, explainable, and accountable. That involves auditing, risk assessments as well, trying to catch issues early and demonstrate responsibility to regulators. I think that's the push in to the insurance carrier, right? And how they're using AI in their operations. I mean, I think the pull out then involves insurers really being able to engage with regulators when it comes to the physical AI that we've been talking about. Like, I don't see a situation where regulators are going to potentially sort of be able to completely define the future without partnership with the insurance industry and vice versa. So I think for these types of matters, like that engagement early and that early planning, because if you are going to want to explore this space, like there's still a lot of regulatory uncertainty in it. And, how do you begin to navigate that? So I think that's sort of the two sides of the coin with respect to the regulatory environment here is sort of, what do you need to bring in-house and sort of in your four walls to really provide the right controls. But then also, once your product is out in the market per se, or you need to build a product for this new market, that's going to take a significant amount of engagement and sort of public-private partnership, I think, to really get to scale.
So I would agree with that. And I want to go back to one comment you made. So you talk about Tesla and the millions of miles that have been driven by their autonomous technology. If you start sort of extrapolate that into the future, you have this partnership between manufacturers and insurance carriers under regulation that supports it. Would you foresee that these combinations would then lead toward more more data being shared between manufacturers and insurance companies to ensure that the rates or the whatever the public, whoever their customer is, if it's going to be a corporate entity or if it's going to be a personal person doing this, would be able to get the correct rate for the risk that they're assuming or taking on. And I'm only asking that because you think about these situations where you have currently the little plugins that you put into your car that they'll tell you about acceleration, deceleration, et cetera. But as we all know, with literally all cars now, but certainly like all the EV cars and the ones that have autonomous driving, they have a boatload of sensors and a lot of data that gets captured along the way. Could that be something that would be then shared as part of this relationship to manage risk in a different way?
Well, I think that's one of the factors in terms of how fast there can really be scaled adoption of this technology and then providing the insurance products to be able to support those risks. I think right now there's certainly a lot of desire to have sovereignty over the data rather than to perhaps share the data in the fashion you're describing. I think that's where a public and private sort of solution is going to need to be required if we're thinking about being able to provide insurance in this new paradigm. So remains to be seen from my perspective. I think it's a key factor to get to scale for new insurance products. I don't see a scenario where the OEMs and, the manufacturers all want to have their own insurance companies and all underwrite their own insurance risk. Like they're going to have to work with the industry to be able to provide insurance en masse if this is to truly get to the scale that's predicted. So I think that'll be an issue that needs to be solved. I'm not seeing a huge amount of like momentum in that area yet, because I think there's still general reservation, particularly as AI is still in its early innings, of more data sovereignty rather than data openness right now. And I think that will change over time, but that's my perspective. I don't know how you feel about that one, Michael, but that's kind of where I'm at with that.
Well, I was thinking about from the other perspective. So you take any one of the large established carriers who has established lines that we've all known, right, for years, decades, century plus, right? I mean, these are dyed in the wool. They know exactly what they're doing, and they've got all the metrics to prove it. When you start moving into this new paradigm, would you see that even from again, this is a hypothetical question because I don't know if anybody can answer it at this point, but have like an insurtech division emerging to support this new model to protect the mothership, if you will, from the potentials because this is so new?
Well, I mean, I think that is going to be, you sort of touched on it. From what I think is still so unknown is that, the way, if you really think about the adoption curve of this technology and where the risk will change, historical data is probably not going to be the best tool to properly underwrite that risk. You're going to need real-time data or near real-time data and even projections rather than predictions, and in some cases are based on historical data. So I think, like, back to the original question, that it's only going to work successfully to have the insurance industry that thrives in this environment to sort of solve that with these manufacturers and with these software providers and technology companies. And you mentioned insurtechs, they're part of the ecosystem as well. Like, that need for that data is going to be critical to be able to provide and develop new insurance products. So who solves it? I don't think we know the answer to that yet. Like, I think everybody knows it's an issue. So we'll see how it plays out here going forward.
So your articles mentioned also a bunch of forecasts that have been thrown about, and I want to get your feel for how accurate you think these are, and where you think things could be changing more rapidly even than perhaps you initially thought.
Yeah, it's a great question, and I think everybody's crystal balls are probably a little cloudy on these topics overall. I think a lot of the discussion right now is AI is, overhyped in terms of like what it can do and the transformative benefit and so forth. And, I don't remember the CEO, but he was just on CNBC Squawk Box, I think. And he said, what if AI is underhyped and, things are going to happen faster and in a more profound way than we think today? And it's interesting when you sort of put that in perspective, because, like I told you, I had my ChatGPT like moment just, several months ago with respect to physical AI, and I couldn't believe how fast it had, matured from when I originally experienced it in sort of a beta test several years before that. So I think as it relates to generative AI, agentic AI, the software, the digital AI, I think that's moving very, very fast. I think it'll continue to move very fast. To me, that's less about the technology, and that's more about organizations understanding that they need to transform their operations, their workflows around this technology, not try to apply this technology just strictly to the way they do things today. And once that light bulb goes off, I think you're going to see much more success in enterprise scaling for the technology. For the physical AI, autonomous vehicles, humanoid robotics, that to me is going to be more of a escalator rather than an elevator. I think in terms of the adoption curve, I mean, I think you're going to see gradual rollouts like we've been seeing, over the course of the next 3 to 5 years. I think we're still 3, 5 years away from the mass commercialization of humanoid robots where you're going to start to see them, more directly sort of when you're interfacing with them and so forth. Obviously you can go to a lot of retail establishments and interact with, kiosks and those types of things, but I'm talking about a much different type of, physical AI paradigm where, these are robots performing human-like tasks that are typically complex. I think we are, on a gradual upslope the next 3 to 5 years. And, it may take even a little bit longer than that before this really becomes like something that is mainstream on the physical side.
Gotcha. So how would you advise insurers, and I'll start with, like I said, we'll break them into two sections. One, sort of the larger, more established insurance firms that all of us would know of. And then there's maybe the mid-tier specialty insurers. How would you advise each one of those groups as you look at the technology we talked about today?
Yeah, I mean, I think you probably have some similarities and some differences. So, for the large insurers that are going to be in the orbit of these technologies, right? They really have a chance to, I think, lead in many ways the future in terms of the products, the services. I think they can have a higher sort of in-house versus external because of their own ability and size, perhaps. But we would never really, I think, suggest that you can go it alone, regardless of size. Like, you're going to need a curated set of partners and a curated ecosystem. It just may be the degree to which you do that with. When you get into the mid-size and maybe the smaller insurers, I mean, that has to be central to your strategy, is partnerships and ecosystems, particularly if you may be in the lines of business that could really be disrupted by this technology down. Didn't say it's happening, in 2026. We're going to be on, like I said, a gradual rollout here. But if you're in those lines of business we've talked about, personal and commercial automobile, workers' compensation, I think this has to go into your scenario planning and really understanding what you might need to do differently in the future and what your ecosystem strategy is. On the larger side, you still have those risks, but you typically have a more diversified portfolio. You may already have an established kind of ecosystem and so forth. So, you can be a little bit more judicious perhaps in where you invest and so forth. So I think both scenarios, an ecosystem partnership model is going to be required. It just might be degrees based on the size of the company and how exposed you are to some of this disruption potentially.
And within that ecosystem, what are the core tenants, or what are the core components of that ecosystem that every insurer is going to have?
Yeah, I think it's going to be a sort of a mosaic of a couple different components that focus around the insurance business holistically. So, first, the underlying technologies. We talked about the data that might be available or might be required that's going to be needed to fuel your business. So, that would involve, OEMs, that could involve insurtechs, it can involve different types of companies that supply that data. Then you have to look at some of the, the functional value chain of the insurance company. So your distribution partners. So what does that ecosystem now look like in the future? Do you need to open up new distribution channels for new products that you want to sell? And then maybe the products themselves. I think insurance companies, for the most part, in the most part, have wanted to design and manufacture their own insurance products in-house. But we've seen more and more scenarios where, that is being supported by insurtechs, and that is being supported through other channels to create those products. So you think about the product itself as well. So those are just two examples. There's more I think about in terms of like, what is the fuel you're going to need to power the future? And that's going to be your data. And you need to curate an ecosystem around that data. And then you think about sort of the functional elements of the insurance company. The two that jump out to me are distribution and product. And like, what's it going to take to be able to get the product to market or to the customer? And then what is that product and how are you going to build it? And how much do you do in-house versus how much do you leverage a network to do it?
That makes sense. And I'm sure we're going to go from just workers' comp to we're going to go to robot comp, because I've seen how they've tested these robots. They end up throwing bats at them all the time and pushing them downstairs. So I'm sure that'll be one of the next products we'll see, right?
Maybe. That's certainly those videos. Sometimes I think they give you a reality check that we've got some time to go. But like I said, I thought this was a great way to get the dialogue started and talk about maybe a different sleeve of the AI transformation that we're all going to be experiencing and what the implications are in the insurance industry. So it's just a topic I'm personally passionate about and wanted to explore, and I'm glad we got to do that today.
Me too. And for everyone listening, I will leave a link in the show notes to the direct article on EY website so that you can take a look at it and read it for yourself. But Chris, thank you so much for joining us today. I really, really appreciate you coming on and talking through this article and then some, because we definitely covered things that are outside the article, but I really appreciate your insights.
Yeah, Michael, it was a great conversation. Really enjoyed it today. And hopefully our listeners get some good value from the dialogue, and really appreciate you having me on. Thank you.